I'm going to call it a stable coin. Now, stable coins, as an economist, I don't see any innovation there. I see a balance sheet that looks like a bank.
What just happened to Bitcoin?
Bitcoin. And I have very negative views, and I know that the data, meaning the price of Bitcoin, might go against my views, but that's what it is. It has failed completely. It has failed miserably.
Gold, you can't eat it. You can't drink it, and it doesn't pay any interest.
A lot of the things I said about Bitcoin could be said about gold. But again, this is completely artificial.
Many of our people watch our shows, and certainly people that I know, it's on their radar screen, but they don't really understand it in a sense of what it, having a stable coin means. And then, moving also into crypto, is crypto going to be someday, really like money, or is it, sort of like a toy? So I guess, if you want to, however you want to tackle that, or, crypto or stable coins, I think I'm really interested to hear what you have to say.
Let me start with stable coins. In some sense, I think it's very easy if you think about it. If you take a step back, don't read the news, and just think about it for a second. Again, you and I have an account at the bank. Let's say we both live in the US and we both have an account in banks in the US, and our account says US dollars. Now, your account at your bank, I'm going to call it a stable coin, because your bank promises you that if it says $1, it's $1. And my bank says it's $1, it is $1, and our dollars are the same value. So we have a system that ensures that all these things that we call US dollars or euros, whatever country you're in, they have the same value. Now, stable coins are sort of the same thing. So I'm a company, and the biggest stable coin, which is in the crypto world, is called Tether. It says, I'm going to issue something which is equal to $1. Now, I'm going to call it something else. I like to call it Tether. Fine, call your bank dollar something else as well. That's just a label. I'm going to guarantee that this thing is equal always to $1. One Tether, $1. How do I do that? By having a solid balance sheet like your bank that ensures that I can guarantee that when you want to withdraw a Tether, you can always withdraw it at a value of $1. So as an economist, I don't see any innovation there. I see a balance sheet that looks like a bank, and I see something which sounds very familiar. We all like stability. Yeah, some people like to call things Tether, other dollars, but again, that's irrelevant. That's a label. So on one hand, this is not a big change. Now, what is a big change? The big change is the following. If you live in Argentina and you say, hey, I want to open an account in the US in US dollars, the bank account will say, sorry, that's not allowed, because there is regulation that says unless you have an address in the US and unless I know who you are, I'm not going to open an account for you. Now here comes Tether and says, don't worry, I'm going to let you access dollars without having to go through the US banking system. I'm going to call them Tether. I can call them, I don't know, foreign US dollars. I can call it, the name is irrelevant. I have my balance sheet. You can come to me and I'm going to give you an asset which is the equivalent of $1. Now, that sounds like an innovation, but I like to call that regulatory arbitrage. What these people are doing is going around the regulations that we have put in place for a reason, creating assets that allow people to do things that within the regulatory environment are not allowed. Now, some people say, great, now I can do that. And I understand that point, but my view is, wait, why did we have that regulation in the first place? Because now we're going to get out of this regulatory environment and we might run into trouble. In particular, you trust your bank, I trust my bank because they're regulated. Do we trust Tether? Do we trust these stable coins? Now, if they're not regulated, I'm not going to trust them. It doesn't matter what they tell me, I'm not going to trust them. But if they're regulated, they're going to become a bank. So that's been the tension there for a while. Now, what you're seeing now, in particular in the US, regulators are saying, this is the Wild West, do whatever you want. I fear this is going to lead to an explosion of these things, which are not going to be regulated, where these balance sheets in theory are going to be there, but you and I cannot check because no one is regulating them. And this is going to lead to a lot of financial instability slowly building into our system, both at the domestic level, but also international, which makes things worse. Because as these things get now linked across countries, it's not anymore just the US financial system, it's the whole world sort of linked through these channels and all these stable coins. And it's going to create potentially the seed of the next financial crisis. So again, as an economist, these things to me look like your bank and my bank. There's nothing special. But I worry that if they're banks and they use our money and they keep our money, but we do not regulate them, we know what the consequences are. Without regulation, financial systems become very unstable. So again, that's my fear. We're about to enter a territory that we've entered many times before. Without the proper regulation, financial systems become unstable. And my prediction, we'll see this in a few years. This is the beginning of that story.
I love your idea, your concept of it's regulatory arbitrage. And for me to really want to put anything serious into it, it would have to be regulated. Whether maybe it's issued by JP Morgan or issued by a company that I think, issued by, pick a name, Google, that I think will not go out of business, very shortly. But once you have that stability, then the people who love it for the regulatory arbitrage might not be able to make use of it. So looks like you've spotted the fundamental
Yeah.
tension between if it's safe, then people don't want to use it. But if to get a lot of people to use it, then it has to be a little unsafe, which is
Yeah.
that's a tension that will be interesting to see how it resolves.
Yeah. Correct.
Thank you very much for that. And on a related note, crypto. I mean, I look at crypto and, it's a risk asset. It trades like the stock market, sort of with more volatility. And I often think that is most useful because over the weekend, when nothing else is trading, I can look at Bitcoin and it tells me, did something just happen? As a
Yeah.
matter of fact, I realized the president, the Trump had been shot during the campaign because like, what just happened to Bitcoin? Did something happen in the market? And then you start to look. So thoughts on crypto, or no, certainly at least on the big coins.
And I have very negative views, and I know that the data, meaning the price of Bitcoin, might go against my views, but that's what it is. Bitcoin was born as an alternative form of money. If you look at the white paper written by Satoshi Nakamoto, whomever he or she is, it says very clearly, we're going to create a currency that is going to compete with the US dollar, with the British pound, with the yen. It has failed completely. It has failed miserably. I don't use Bitcoin when I go to the supermarket. I cannot use Bitcoin when I go to the supermarket. That is the case across the world. Bitcoin is not used as money. Now, because of that, the narrative changed to Bitcoin is an alternative asset. You can invest in Bitcoin. So you can put your money in stocks, bonds, gold, and Bitcoin. Now, as a professor, that sounds really strange. I create an asset that has no fundamentals, no earnings, no value, no intrinsic value, but it's an asset that allows me to create a new investment class. That sounds wrong to me. Now, wrong doesn't mean that I cannot invest. Of course, I can invest. And if it goes up, I make money. And if it goes down, I lose money. And if it has a negative correlation with the stock market, I can hedge my investments, whatever. But again, this is completely artificial. That makes no sense, again, as an academic, that we create assets that are artificial, hoping that somehow they develop properties that are good for investors. Hoping, because today they don't have them. Bitcoin, it is not a hedge against inflation. In the data, it is not negatively correlated with inflation. People say that, but it's not. It does not negatively correlate with the stock market either, so it's not a good hedge. Why do people buy Bitcoin? Because they think it's gonna go up. But
I
again,
think
that's a very strange way to think about asset classes that is supported by just the expectation that it will go up. Um,
I suppose I was a fir I've been a gold trader for many years, for the banks and then also myself. And then before that, I was a currency trader. And, there's a compelling argument that's made that, that it's the only currency where you cannot print any more than legally, that 21 million will reach that at some stage in the future. But for all intents and purposes, in the next decade or two, we'll have printed as all built. We have created all the Bitcoin that can be created, and therefore it's the only so I suppose currency that doesn't inflate. Do you find any compelling argument in that?
I don't. Again, I understand where that comes from. I understand that that comes from, again, from the white paper of Bitcoin that says central banks are going crazy, they print too much, they create inflation, so let's create an alternative. That's where it comes from. First disagreement, central banks are very good at doing what we tell them to do. The European Central Bank was born in 1999. 26 years later, they've delivered 2% inflation, which is what we told them to do. So they've done exactly over 26 years what we told them to do. So it's very hard to say, oh, they've done too much. No, they did what we told them to do. They cannot do more or less. They did too. So I don't have that negative view of central bank. Second, because the supply of something is constrained, it doesn't mean the value is stable because the value depends on demand and supply. So today, Bitcoin trades at over 100,000. Is 100,000 the price that will be around in 5 years? Only if someone is willing to pay 100,000. So you need the demand. It doesn't matter how many units that are available. Now, people have the view that the demand is going to grow forever. Now, this is what is called a pyramid scheme. That's how these things happen. Sure, if I sell you something, whatever it is, and you can sell it to two other people, and then there's three, and then there is four, sure, I can make the price go up forever. But I need a demand. It is not enough to say we created something which is of finite supply. So again, that to me is not a good argument because you still need the demand side to price Bitcoin and says, hey, how valuable is this thing? Without fundamentals, the answer is no one knows. So
Um,
that's the
um,
problem.
Yeah, I do a couple more questions. I've kept you for a long time. You've been really,
Okay.
really helpful. So yeah, as I mentioned, I was a gold trader, and you could say that gold, and I think Warren Buffett might have said something about very clever about it, but gold, you can't eat it, you can't drink it, and it doesn't pay any interest. And I suppose there's intrinsic value. I mean, it's a great conductor of electricity, but you're not really going to use that with gold, gold at $3,300 an ounce. What are you thinking about gold?
I mean, I think it's very similar. So a lot of the things I said about Bitcoin could be said about gold. Now, gold has an intrinsic value. It might be a lot lower than what the market value is, but it does have an intrinsic value. People pay for jewelry and people appreciate that value, whether you like it or not. That's a fact. So there is an intrinsic value in gold that there is not in Bitcoin. So again, that's a difference. But you are right. Some of the narrative we build around gold is similar that says, hey, there is a crisis. Let's all buy gold because typically gold goes up in crisis. When we do it, it goes up. Again, that's okay. Again, I might not buy gold because that's not what I want to do. That's okay. But people need to understand that when the crisis ends, the price of gold goes down. That's not typically what people think. People say this is an asset that can only go up. Now, that is not correct in history. Gold is not always going up. It depends on the decade, it depends on the year. So it's a volatile asset. Now, if you say, yeah, it's volatile, but it hedges me against this risk during periods where we are panic, fine, do the correlations. If it works for you, go ahead, buy it. Now, creating Bitcoin, which has no history like gold has, to try to pretend that we can do something similar, that seems to be an even bigger stretch to me. Because then why don't we create 10 more, 20 more assets and we wait and see the correlations and then we all make a narrative that says, hey, this is a good investment strategy to buy it here or there. Again, gold is there. There's a history. Yes, it does resemble a little bit the type of narratives that I said about Bitcoin, but there is at least the historical view plus the intrinsic value. So I think Bitcoin is one step farther from gold when it comes to that narrative.
And then my last question, uh, as you look around the world and you're very, your macroeconomic reach, it seems to be very, very good. Is there a place around the world, a country or an area, is it Latin America or certain countries in Latin America or perhaps in South Asia that you'd say, in the coming decades, I would like to have some exposure here because I think, they're doing maybe the right things on a regulatory basis, or, they have a population that's really, really great. Like, opportunities that, might not jump out right in front of you, but you should pay attention to.
And if you look at history, by history, I mean many, many decades back, there is a region of the world that consistently has beaten everyone else, which is emerging Asia. Emerging Asia extends all over Asia, again, north, south. These are the countries, the markets that clearly have consistently, not just 1 year, consistently grown faster than Latin America, than Africa. And this is a really big region. So it's not just that they're growing fast. They have more than 4 billion people. So it's not just, okay, let me give you a growth rate that is impressive. It's impressive in a very large economic and demographic reason. So I expect to see the same going forward. I expect growth in the world is going to come from emerging Asia. Again, I feel quite confident about that. Now, I always warn people, be careful. If you say, let me translate this into returns, financial returns, be careful because you need to put the money in the right companies, in the right investments. You can make a lot of money in a country that is not growing because there's always companies that can make money. The stock market in those countries is not always a reflection of growth because the stock market is not very deep. There are very few companies that might be represented. But if you want to think about potential opportunities, again, that's where growth is going to come in the coming decades. It's going to come from emerging Asia. The center of gravity of the world is going to move even more in that direction. That to me is a trend that cannot be stopped.
Dr. Fatas, thank you so much for spending so much time with me today. That was really a wonderful discussion, and I look forward to talking to you again.
Thank you. Anytime.